Good afternoon, everyone. Gabe Velazquez here with you, transparenttrading-solutions.com. Hope everybody's having a good week, although markets have been pretty flat and lackluster. But next week is going to be the big week, right? We got a Fed meeting. We've got some inflation data. So hopefully we get out of these doldrums here coming up. In any event, welcome everybody. I do have a class coming up. I want to announce this is my first actual. This will be an actual class. It's going to be 2 hours long. Recordings provided. Some follow up for a month, and it will have very specifically have to do with. It's going to be a strategy class pertaining to the three strategies that I use, that I implement in the options market, especially in this environment, that have been working really, really great. It's going to be very specific. It is a 2-hour class. If you want some more details, I'm going to limit the class. It's going to be 2 hours, and you will get a recording, so you don't have to be there live if you don't need to, or if you don't have the time. Click the link below if you're interested in learning. This is not going to be a beginner's course. This is this is going to be a strategy course. I am going to go into full detail, give you the setup, walk you through all of the, some examples I've done that have worked out really well. So if you are interested in learning about options, and it's going to be 3 specific strategies that I use, click the link below. It's going to be next Tuesday, 4 o'clock. It'll run for 2 hours, and we'll record it so you guys have access to that and follow up as well. Okay, so that's my first class I'm going to run since I've done this. We're going to go on 3 years, so I'm excited about that, to teach again. So in any event, if you are interested, click the link below, get some details, and maybe I'll see some of you. I'm only going to limit it to 10, by the way, so because I want to get it personalized. Okay, all right, so let's get into the markets. Not a lot, really, since last time we were together, Friday. It's been a very, very tight range in the S&P. Literally for the last 2 days, we've been literally in about a 20-point range, which is really incredible. Well, actually about a 35-point range, hovering right along that 4,300 mark on the S&P. What's going to get us out of here? I don't know. This week is going to be interesting because we don't have any catalysts really per se. Next week's going to be the big one, as I just mentioned. So nothing really. Again, I mentioned the level. Yes, last Friday, 43.05. We did hit that. Came off about 2x, and now we're kind of just hovering around. We have some levels above 43.30 and so forth on the S&P. But nothing really spectacular. Similarly, the NASDAQ continues to kind of just, I would call it like grind higher. We are coming up to some really key levels on that as well, around the 14,780-ish area. So you might want to take a look at that. Interestingly, all the action, I've been kind of deferring, I've been kind of referencing this. Small caps. They are playing catch up. So, I kind of mentioned a little bit of this on Friday. We're getting a rotation, a little bit, picking up some of these undervalued, kind of beaten down sectors. Specifically, the Russell did finally break out above the 1825 level that we've been talking about. We are coming up to some really good selling areas too, by the way, that we're looking at TTS. If you check out your charts right around 1900 level, there are a few levels in there that we're looking at to possibly get short. And we try to get a pullback here around the 18K level. 1800 level that we never came far enough. But all the action, interestingly, right now is in the small caps and the banks. The KRE is also looking pretty interesting. Look like it may want to break out as well. But all in all, as you know, on the S&P, the NASDAQ, just very, very quiet. And 2 days of sideways action like we've been getting probably portends. It's probably going to do something I'm not sure, again, it's interesting because we don't really have anything until next week, but you never know with these markets. Something's going to get it moving. The VIX at 14, maybe the VIX goes down to 12, 10, and then we start a new regime between, the VIX going from 10 to 20 kind of thing. I wouldn't be surprised if that happens. Volatility is really dried up. The good news is, and again, this is kind of why I'm having this class, is the good news is this kind of low volatility environment is wonderful for options. Why? Because premiums are really, really been coming down. And when we do have finally some volatility next week, you can get you can buy options with very, very, low premiums. And that makes it more, the risk and reward profile really picks up. So we'll see how that goes. We are still TTS. We are still, we're trying to play Tesla. We're doing some condors on some of these earnings plays this week. DocuSign is in particular, because the volatility is so low. If you have a high implied volatility stock with that doesn't move, that's generally that type of thing where you can, but you got to have the right setup as well. So that's what I'll go through in the class coming up on Tuesday. Bonds, not a lot to talk about, kind of in the middle part of the range here, kind of in no man's land. We talked about the 129. We did pull back. We're heading right back up again. Just a lot of chop in the bond market. Again, I don't foresee anything big. Maybe jobless claims on Thursday. That's kind of been a bit of a mover for the bond market. So maybe that gets moving a little bit. And then also, just very quickly, I actually had this, we did talk about this in our morning session this morning with our members about the corollary between bonds or the interest rates and the dollar. So that still seems to be the case. So the way you want to benefit from that is if you have the bond market selling off further, maybe later this week or next week, that should push the dollar higher, and then in turn, obviously, that would be bearish or push currencies lower and so forth. So, but all in all, also just kind of stuck. Looks like we're starting to form another consolidation: 103.62, 104.54 on the dollar index. We had Australia come out yesterday, raise again, but really no impact on that. A couple trades we're looking at here. Again, I keep mentioning we're getting really close to filling on Mexican peso. And also tomorrow we got Canada coming out with their announcement. As you see, the Canadian dollar's been big old ranges. We're coming up to the top end of that range, so it's going to be interesting to see tomorrow at 7 Pacific is when the Bank of Canada announces. So we'll see if that pans out. There's also some lower levels I'm looking at as well at the bottom end of the range, but those currencies have been pretty good recently. On the metals, not a lot going on, so I'm not going to spend a lot of time. You got silver and gold still generally just chopping around in these kind of just messy ranges, so nothing going on. Copper trying to get a little bit of a bounce here, but again, nothing in particular that I'm really interested in until maybe we get up to the $4 level again. $4, actually $4.10, $4.20. There's some decent levels in copper, but generally speaking, just very choppy. We did hold that 354 level in copper, and we'll see, but it's generally been just very, very choppy. Also, we did, you guys know that OPEC came out this weekend and announced another production cut. I think I mentioned this level that we were trying to short oil. So a very interesting situation there. Our entry was 75.18 to go short oil. We were using micros. So this is going to be interesting. If you have your charts up and you can see this, you can actually see this. So if you were trading the full size contract in oil, never got, the high was 75.05 on Sunday open, right? The gap up. The micro MCL N23 high was 75.35. So we actually filled on the micro. Yep, we filled short on the micro. So I have a few members, or actually a whole bunch of members. We're short oil because the micros actually did fill above 75.18. So sometimes that does happen with the various contracts. We came very close to hitting our target 69.70 last night, and then we got a nice little bounce, and looks like we're heading back down again. So we're doing quite nicely on that trade, which filled over the weekend with the OPEC situation. And one of the things that I do talk about, you've heard me say this before, is these news events. We talked about New Zealand a week and a half ago, the OPEC now. What the news does is generally, if it's going to move, it spikes prices into levels, just accelerates the price where it's going to go anyways. And that's exactly what happened with the OPEC, right? Yeah, we're doing well with that so far. We're very close to the target, very conservative target. Hopefully we get that. We may actually take profits on that beforehand. So we'll see what happens there. You can see it on the chart. 75.18 was our entry. We actually, and again, if you were trying to trade the standard contract, never filled, but the micro did. So all you have to do is look at the micro, and you can see that it actually hit a high of 75.35 on Sunday open. Okay, so we got fortunate there. All right, going into the energies other than oil, we really, nat gas kind of hanging around 215, but not a lot to talk about there. Let me circle back to oil real quick. Oil is basically in a big old range, and the question I actually have from a few people is that level still okay? That 75.18 level up to about 76.50 or so. You can see that on the charts. Is that still a fresh level, whatever you want to call it? I would say if you want to give that a shot, it lessens that. I'm looking at much higher levels now. And all in all, that was an aggressive trade to begin with because it's in the middle part of the range. If we break 70, I think we're going to head back down to the 66, 67 level where we bounced from last week. But I do anticipate at some point, because this is what markets tend to do, I do anticipate that we're going to probably revisit those lows around 64, 65 at some point, because again, there's probably some people trapped down there, and maybe some algo is going to gun for those. So that would not shock me in the least. But generally speaking, oil has been a bit of a challenge if you are trying to trade in the middle part of these messy ranges. You have to be super patient right now. One thing also I did mention the other day, and this is where options come in again. UCO, USO, which is the oil ETF, actually on that low at 67, there was no level on the price chart per se, but it did come into a gap, so that was interesting. So if you were trading in the USO, the ETF, you actually got filled on that with a call option or something. So that's some of the things I'm going to cover on Tuesday as well. Grains, we have a big grain report Friday, so I'll be here after that. Soybeans again broke above 1342 and just kind of meandered today. It's going to be interesting. We got some levels up around 14 a bushel coming into that report. That's on Friday. Wheat just very choppy, and then corn looks like it's got a big gap at around the 650 area that we're looking at as well. So, yeah, to sum it up, everybody, quiet thus far this week. That includes everything, really. I mean, even Tesla. You know, we've actually done really well with our option strategy in Tesla, and even if you're watching that as a proxy for the S&P, it's kind of tracking the S&P. They tried to take it down earlier today. They went down to like 214, rallied it right back up. Seems to be pinning. They're pinning it right around the 220 level for now, and I think it's probably due for the next level if you're watching Tesla is about the 236 level, which we'll need to see the S&P break out above 4,300 and get higher in order for Tesla to get going, unless it really breaks the correlation. But the correlation is pretty strong right now with Tesla and the S&P. So kind of using that as a bit of a proxy there. So again, there's not a whole lot to really cover other than again, until we get some movement here. But just focus on some of these markets. Small caps, right? If you haven't traded RTY or the micro Russell, you probably want to start looking at that because that's where the action is right now. And you obviously, as a trader, we have to move around, be flexible enough to track where the movement is. And that doesn't, obviously the big markets, S&P and NASDAQ, still kind of moving higher. Been very, very shallow pullbacks, which is probably not a bad thing if you're long. We want to see some cooling off, some consolidation, as opposed to just the thing just going crazy, because the steeper the angle, the parabolic move usually ends in a lot bigger pullbacks. But the fact that we're kind of just digesting a lot of the gains could in fact be, you can kind of look at that as a more of a bullish sign. Okay. All right, everybody, I'm going to get out of here. Again, if you're interested in looking into the class, I'm only limiting it to 10, first 10. Hit the link below. I'll be sending out some emails on that. I'm kind of excited about teaching again. This is going to be a full class, I believe. So anyways, let me know if you're interested in that. If not, have a great rest of your week. Hopefully we get some movement coming up here. I'm sure we're going to, after 2 days of tight ranges, I'm sure something's going to get us moving here. So be ready for that. Okay. All right, everybody. Have a great rest of your week. I'll see you on Friday. If you need anything, again, click the link below. Support at transparenttrading-solutions.com. All the links below. Hit the thumbs up, subscribe, and all that good stuff that we do on YouTube. I'm not a good YouTuber, apparently. Anyways, I'm too busy trying to make some money, right? While everybody's doing YouTube videos or whatever. Okay. All right, everybody. Have a great rest of your week. I'll talk to you soon.